Good morning, everybody. Happy Saturday. Wall Street Jesus here. Saturday Sweep Series. Another wild week in the markets we get to talk about. And I don't know about you guys. I mean, listen, nobody likes to lose money. It's never fun if you're losing money. But I enjoy this type of environment. You know what I mean? As a trader, I think when you're an investor and you're stuck in, well, not stuck. I shouldn't use the word stuck. You're in longs and you're watching some of your profits diminish and some scary news around you. You know, you're a longer term trader, maybe a trend trader who had a sick run over the last couple of years, and now things are starting to look a little bit different. You might not enjoy this time, okay? But as a couple of you mentioned before we started this webinar, if you're an actual trader, which most of you are, and I think a lot of you forget at times, okay, if you're an active trader, this is a fun time. It's a fun time, okay? And yeah, the volatility's crazy, okay? Yeah, it's not as easy as a lot of people make it out to be as far as finding the opportunities to make money, but there's a lot more action. You know, there's a lot more action out there, okay? And the other thing, too, there are traders, I can't do it, and I recommend to a lot of you guys out there who are just starting to either develop a strategy or get familiar with a strategy on the long side, not to do it. But there are traders out there, you know, with experience that play both sides, okay? Think about that. They didn't have that opportunity for God knows how long. So they're enjoying this type of climate too. And that's what this game is all about. You know, you go through periods of times, some longer than others, that benefit certain groups of and different styles of traders out there. You know, that's one of the beautiful things to this game. There's no one way to skin a cat, right? There's no one way. I'd be the last person out there to tell you you have to trade this way to make money. You know, a lot of people do that out there, especially on social media. They love to push their style as the way to make money, okay? But a lot has to do, as we talk about each and every week in this webinar, a lot has to do with how you are wired emotionally. And if you're comfortable trading that way, okay? And if you're an active trader, if you got a quick trigger finger, which I definitely have, I'll be the first to admit that. These times, you feel a little better about your style and your strategy. You have some confidence in it, okay? And one of the points, you know, Lucci and I were talking about on one of the webinars we were doing during the week on a Tuesday. Last year, if you click the sell button on any name with decent flow or any of the hot names and high growth names out there, you felt like an idiot, right? You felt like a moron. If you bought Amazon off the Bazooka Joe bet and sold it 2 weeks later for a nice profit, you felt like a complete moron a week later because the stock just continued to go higher. All right. And I'm sure if every single one of you guys who actively trade, if you had $1 for every time you sold a name last year for a gain and end up cursing that name and yourself out because it went a lot higher after you sold, you wouldn't even need to trade. Okay, that was just a theme of last year. If you were looking to take profits, you were active, you felt like you were making the wrong decision, okay? And that doesn't last forever, you know? That happens usually at the initial stages of a bull market and the late stages of a bull market. All right, so now the market's got so many players out there accustomed to that feeling. It's got them almost programmed, especially like a couple of you guys were mentioning, some of the newer traders that are trading just a couple of years now. It got them programmed to not sell. right? Or just buy at any given point in time. That's another thing that, last year, I remember doing the webinars here with you guys every Saturday, and you guys just bringing names up to me that have had decent runs already. And you could see me struggle with trying to give my opinion on it, right? I'd be like, the flow's still bullish, but it's been such a mover already. It already moved, and they just continue to go higher. But I know throughout my experience, when you're in the game 20 plus years, that if you get into the habit of chasing is, if one thing you can avoid doing in the market as a whole, and it will help you be that much better of a trader and investor. Chasing is a disaster. Chasing can destroy you. Okay, so last year this market got you in the habit of looking to chase. Otherwise, you missed a lot of opportunities. And if you're doing it now, you're going to get your rear end handed to you. Okay, so that's why, again, a lot of the more experienced traders out there like this volatility, because some of the things they live by and they've learned over the years in this game, they feel like they finally, that edge is working. That, what they've learned in this game and what they've came in day out and made it a business to do over and over and over and again to form those good habits, they feel like they're doing the right thing. And that's always adds to the confidence. And it's such a crucial factor in the markets. All right. So, again, it's exciting for if you're an active trader. If you're not, these times can get a little bit rocky. They can get a little bit scary. And we try to talk about on this webinar, what to look for and how to approach these markets, no matter what type of trader you are. Okay. And the first blanket statement, like I just mentioned, the one commandment, I guess you can say, is you have to avoid chasing green moves. You have to do it. You have to be able to say to yourself, if I miss the move and it continues to go, I don't care. All right. Because you may get away with it for that name. But if you continue to do it, it will bite you in the rear end. All right. And it's a great market to focus on something I think helped me out greatly through my career. And that's looking to buy weakness rather than, getting shaken out, capitulating, being fearful when markets are selling. All right. And I don't think you close your eyes and buy any weakness out there, which you would be better off doing that than buying green in the same way. But there are some things to look at, or things, I guess I should say, that we look at in the steam room that help us as far as the timing is concerned when looking to buy weakness. Okay. And as you guys know, the two major things are sentiment and flow. All right. And that's what basically, while this market's in this type of condition, while we're in this environment, the things we're going to concentrate on week in, week out are those two things. Okay. What is sentiment telling us? The overall sentiment amount out there amongst the retail crowd, the trading crowd. And then what's the flow trying to tell us? And that's basically, we're getting a gauge on what the professional money, how they're aggressively speculating in these markets. Okay. So that's the theme we're going to use to approach each and every webinar as as we continue to be in this type of environment. And then we can focus on other things. Because like I said, last year, sentiment really was a waste of time to look at for a lot of the year. Okay. We were looking at intraday sentiment stuff because that's the only time you would get an intraday fade. Maybe people would feel a little bit bearish, line up on the put side because they thought the market was toppy, and look for a squeeze. As far as any of that intermediate sentiment stuff, longer term sentiment stuff, there were weeks where I wouldn't even pull it up because there was no way there was anything to look at there. The only thing we would be looking at, a lot of you remember, was any bullish extreme. And then we would take a little cautious approach and size down and lock in some gains and stuff like that. So now we can pay more attention to that stuff, and there's a reason why I pay serious attention to this stuff. It works, guys. Okay, it works. The market is built and trades off people's emotions. Whether you want to believe it or not, there are machines out there programmed to take advantage of your emotions as a trader. Okay, think about that for a second. This is not back in the day, everybody pushing their own buy, sell. This is not another human being on the other end with emotions wrapped up, getting a read on your emotions. Okay, there's actually algos and machines programmed to screw you based on your emotions out there. And that's why this stuff works. That's why when you see a lot of the sentiment stuff we look at extremes, right? When everyone's fearful, bearish, capitulating, and all that stuff lines up, there's a reason why you see some of the smart money start to buy things and there's a high probability squeeze in the works. It's not magic. So, I just want, for anybody who's new, that's why, I focus on that stuff religiously. These aren't imaginary lines. These aren't, some concocted system or program I created. It's simple logic. What the pros are doing, what the retail crowd's doing. That's simple. All right. So on that note, let's take a look at some of this stuff. Okay. And just, again, getting a general idea of where we came in. All right. We had the panic, right? A lot of bearish sentiment mixed up in here. Everybody fearful. You had every put the call you can possibly look at spike into bearish extreme, in simple English, meaning everybody all lathered up in protection in VIX related products. And even more so, not just protection, betting on further downside. A crash is coming, this is coming, all that stuff. Okay, so you had a huge shift from bullish to bearish there. Okay, even some of the other stuff, you might have seen me post on Twitter or Sentiment Trader, the major ETF liquidity premium stuff, like the QQQ, the SPY, and what a lot of traders do when they get fearful in the market, they sell individual names and they'll put a portion of that money in the major ETFs. Okay, so they don't even want to be bothered with stock picking. And they're looking for the more liquid structures like major ETFs and stuff like that. Okay, that's another sign of a bearish extreme. All right, so you get all that stuff, the bearish leveraged ETFs. We'll look at that again. Remember that chart. People buying, retail players buying leveraged bearish ETFs. Okay, so all that stuff. So you had that stuff here we spoke about. You had a major squeeze. Honestly, a lot more than any of us probably even thought was remotely possible. Okay. And then it washed out a lot of that bearish sentiment. People started now to cross over to the bullish side. It's correction's over. You know what I mean? It was just related to the VIX. It was interest rates. Keep an eye on interest rates, because if interest rates head lower, then the correction's over. How quickly, you see how all those things just, it's like a fart in the wind. Nobody's even paying attention to them anymore. Like, what happened to the VIX stuff? That's out the window. The treasuries were the biggest thing, right? Inflation. Oh my God, inflation. We get over 3%, Armageddon. Rates were down as the market was getting killed at the end of the week. Now it's the Trump tariff thing. And that's a correction. They just, last year, all this stuff would have got brushed aside. You wouldn't even be talking about any of this stuff any much longer. The famous words was, this market doesn't give a shit. It doesn't care. When you get into a correction, the market cares about every little thing and uses it as an excuse. All right. So, and the good thing is all that stuff will build sentiment. You understand? The tariff scare adds and takes away bullish sentiment out there and adds to the bearish sentiment. So all that stuff is good. It's a good thing. But there's no reason to get hung up on it because it really doesn't matter to you as a trader. Maybe as an investor, the tariff stuff is a big deal. I don't know. I don't care. I'm a trader. Okay. So we had that big rally, washed out all that bearish sentiment, started to lean bullish. Market got a little tired, some profit taking. In my opinion, totally normal. This market went a little bit further than anybody thought anyway. Okay. And then what happens here, little by little, we start to see that bearish sentiment build. Okay. And coming into Friday, a lot of the stuff we look at, especially the shorter term stuff, got really close. Okay. And what that meant, excuse me. What that meant to us is that Friday, if there was any panic selling, any rush to sell, we should look at that as an opportunity to start looking for entries. Okay. And the trigger for us, again, when I say us, I'm talking about all of us in the steam room who trade together every day. The trigger would be sweepers. Why sweepers? Because sweepers are aggressive orders, right? So we're looking for call sweepers. And that tells us that the sharp money out there is starting to get aggressive on the call side. Okay, because I'll tell you one thing. As this market was stretching, as this rally started to stretch a bit, the call sweeper activity really started to thin out. The call activity as a whole really started to thin out. And if you guys remember me telling you, I'm a big proponent. I don't try to get too wrapped up in the put buying because throughout my experience, the put buying doesn't tell me a lot because there's protection even in the most bullish of environments. The lack of call buying tells me more about the sentiment as far as smart money is concerned than the put buying. Okay, because if they're not looking to buy or they're not looking to be aggressive on the long side, tells you maybe, they're waiting for weakness. They're waiting for a pullback. They're waiting for something. All right, so that's what we were seeing in flow here and into the first 3 days of the sell-off here. Okay, so in other words, again, in simple English, there was not much call sweeper activity here, not much call sweeper activity here, not much call sweeper activity here. Okay, so then we get the flush, right? We get the flush into Friday, sentiment lined up. We start to see some green and some call sweeper activity come in. All right, so again, as traders, that's a spot we look for an entry on the long side. Now, again, the issue is depending on what we see in flow, right? Because that's what we're gauging on, will give us an idea of how much or how bullish they may feel about this entry spot. Okay, because if you guys remember here, you remember as we call them, the missiles, right? Which, again, in simple English tells us big, aggressive, bullish bets. Confidence. Shows us confidence more than anything. Okay, so the way we took that was they showed us they're willing to buy this with some confidence. Okay, they're willing to buy this entry. If this market comes back to retest there's a high probability they're going to come in and buy that again. So that's how we would approach that and look at that spot. Here now on Friday, the flow wasn't that good looking. Okay, it was bullish. They were sweeping. There was some decent looking orders in some of the familiar names, but it wasn't as sharp as it was into the lows here. Okay, but again, that's not something I tend to get hung up on, because as a trader, we're looking to take advantage of this pull. Okay, and I'll give you an example, like Micron, as most of you are aware. That was the top action into this sell-off here. Caught missiles. The flow has exploded ever since. Okay, Micron was actually holding up well, and then the last couple days, I think it was 2 days, you could see here, right? Micron, even if with the market tiring out and pulling a bit, Micron saw a flow throughout all of this, as a lot of you know, and all of a sudden started to see some weakness. So that was one of the targets a lot of us were eyeing coming into Monday before the bell even rang. We had futures down. We know Micron was littered with buying, some real sharp buying. If Micron's down today, you see some flow there. There's an opportunity for a trade. Okay, so just giving you examples of how, as traders, we're looking at these opportunities. All right, and how we're approaching them. But what happens is now a lot of traders fall into the trap that if they see some flow and sentiment lining up, that ultimately means that these stocks are just going to trade higher for the foreseeable future from there. And that's a problem you can really run into in these markets. You got to understand, and I understand the option premium makes it tough too. Okay, so you have to weigh that into the equation. But we're seeing moves and ranges out there that are huge. Okay, I'll give you an example. Micron was down $1 and change and was up $1.50 literally in what? An hour and a half? So Micron had a $3 swing in, let's say, 2 hours. If you had that over the course of a couple of days and you were looking for just a trade, you would lock some of that in. Maybe you would decide to keep a piece, but you would lock some of that in. Last year, like I said, you were foolish to sell anything for a quick profit because it continued higher. And I think that's the wrong approach here. Okay, that's the wrong approach here. I think the game plan here is to look for these opportunities, like I just explained to you, when they line up, and those are going to be the sweet spots for trades. What gets tougher is the rest around that. So in other words, let's say Micron or any other name, like we've had trades up here. What the hell do you do with it now? Type of thing. You know what I mean? Or there's some flow in some other names and the market, let's say the market squeezes for a couple days here. It could, right? Monday, Tuesday, we get a further squeeze, maybe to the top of this Hearst band here, the red. The tough part is looking to buy that. That's the tough part. Okay, so that's kind of where we are. I didn't want to use too many individual names as examples, just give you an idea of what game plan we're taking in the room and stuff like that, utilizing sentiment and flow. Okay, and there, in my opinion, we're going to look at some of the sentiment stuff since this bottom here. Okay, I should probably pull up the cues. Okay, tech has been the focal point. There's no doubt about it. Okay, as much as I hate to admit it, because there's so many riffraff traders out there, that's all they look at. There's no doubt about it in flow that tech has been the focal point. Right? You would think the opposite. Everybody's talking about rotation and some of the other groups that have been lagging, and multiples are so high in tech, and the market probably will look elsewhere. But all that being said, since the buying started up into these lows, the main focus has been tech. And not only that, I mean, there's been a point here where it seems like they're ignoring the other stuff out there. Tech has the only thing that's been really beneficial as far as looking to get long anything and profiting from it. All right, so as we continue to see that, and I'll show you some of the stuff that I've looked at, yesterday and into the latter part of last week, that can confirm maybe why they're doing that. Going forward from here, unless we see some major rotation, I was hoping to see rotation. Remember me screaming, we need to rotate up here. This only way this market's going to hold up here, continue on. We need to rotate. There's some stuff that didn't even participate in this rally yet. They never rotated, guys. We never saw any signs of serious rotation. They continued to buy the whole entire way, the Micron, the Intel, the Microsoft, the semis. Continued. Now, there's some other stuff that caught flow, selective names, all with time behind them. A lot of July stuff out there. Okay, but it's selective. I'm talking about the sweeper activity was concentrating, and that's the momentum, right? The momentum, in my opinion, coming out of the flow are sweepers. They were concentrating primarily on tech. All right, so going forward, I think that's the spot. As a trader, as an active trader, we look to take advantage of on down days or weakness. Okay, and thankfully, because of this little pull, we had the opportunity to look there again, right? Because again, if you remember, number one, be careful buying green, right? Try not to buy green. You didn't have much red here in tech, especially the names that were seeing hot flow. Micron seemed like was up every day. We finally had some red. Okay, so you get a pull, you look for some action to come in, you have a possible quick trade opportunity there. And I think that's the game plan from this point until we see some changes in the flow. Okay, and I think, again, that's why, in my opinion, Friday, maybe I wasn't impressed that much out of flow, because there weren't any missiles anywhere else. You know what I mean? There weren't any missiles in general. They came after the same names again. Netflix. Like, Jesus Christ, this thing, right? Like, you would think maybe they leave this alone, let it cool off a bit. And then this thing turns, there was some small weekly activity. I think Maz, you guys know Maz on Twitter. He nailed it. There was a weekly spec buyer at the open. Maz the Degenerate took a shot, hit an absolute home run in it. He rode the Netflix the whole day off it. And then into strength, there's some good-looking June sweeper activity coming in. And then again later in the afternoon. And it just continued to push higher. I mean, it's an absolute beast. Absolute beast. Okay, so again, these moves are big enough, depending on the option side. I want to make that note because a lot of you brought that up. Depending on the premium, and that's where you guys, if you're trading options, you got to have an idea of what the hell you're doing. You got to make this decision if it's worth it or not. If it's worth it or not. All right, so let's look at why I think, in my opinion, you hear me use the word I think because there's no way I know for certain, obviously. But the reason, in my opinion, they may be focusing on tech. And it's hard to believe that these things are here. You remember this famous chart we were looking at? You remember this, right? And remember at the lows where the Micron missiles came in and all that stuff, this thing wasn't there yet, has cooled off significantly. Remember we were talking, but didn't really come in. We want to see this under zero. Look where she is. Okay, so what this is more of an intermediate time frame. this is used for. Okay. Up here, we know everybody's all in. Okay, it's obvious, right? All in here. They're all in on the long side. Okay, and as this continued to wash out, people were felt less bullish. Were positioned less bullish as far as tech and NASDAQ's concerned. Okay, and then as we get closer to the zero line, it basically is telling us they don't have much exposure. Okay, then I see a Bloomberg headline on Twitter, an article, how hedge funds have zero long exposure to tech and FANG. They're not short yet. This is about a week ago, maybe a little more than that. You guys probably saw it. I retweeted it and stuff. Okay, so hedge funds have zero exposure, long exposure to tech and FANG. And then now what this tells us is there's some short side positioning. Interesting, right? You wouldn't think that to be the case. If you remember something similar we saw in last year, I think it was November. Yeah, I think it was like late November. Around then, we had a little pull. You guys know better than me. We saw that hedge funds were short the FANG names. I think most they were ever, right? You guys remember that? We were talking about that? Remember I was talking about how hedge funds were short the FANG names, highest short position they ever had. So, yeah, it was right around that time, John. I think it might have been October, November, whenever it was. It was hard to believe, okay? Why that spot? Usually, those guys, sometimes they're worse than retail when they're lined up on the other side, And, there was obviously an incredible rally because not only are they caught short, they cover that adds to the squeeze, and then they have to get long. Otherwise, they look like morons. They have no long exposure to these things. Everybody and their mother's looking to get long these things. All right, so that looking at this, that's why some of this tech flow is starting to make sense, why maybe they're not rotating yet, because they still feel sentiment-wise there's juice there. Here's another one off COT data. Okay, you guys know these charts. Ooh. This is basically measures speculators. The COT stuff. You get it in energy at the end of the week, all the commodities, S&P, all that stuff. This is the NASDAQ. Speculators, you don't want to be on that side at an extreme. And dealers, where they're usually on the complete other side of the speculators because they know what the hell they're doing. Dealers up here, specs down here. This is NASDAQ. Can you believe this shit? Nuts, right? So just in case you thought, all right, where's Jesus getting this stupid NASDAQ sentiment index? Where is he concocting this thing? Probably bullshit. Just in case you thought this might have been some fluky reading, this confirms that. So, as much as it's hard for me to swallow, as you guys know, you know what I mean? Looking and focusing on tech. Because again, I see the risk reward out there like many do probably in, all these spots that have been hit over the head and just have been ignored. But maybe they're being ignored right now for a reason. And again, I think the opportunity is looking to take advantage of the weakness as a trader. Okay. And if you have the luxury of flow, it can help with that timing. If you don't, you are either using something on your end or, just as a simple trader, you're using basically you want a pull. You know what I mean? You're looking for some sort of intraday selling or the course of maybe a couple days selling if you're swinging for longer than, a day or two. And you're looking for entries off that rather than trying to chase green. And the problem with chasing green now is even though the sentiment's lined up like that, the volatility, guys, you buy, I don't know, a Netflix or an Nvidia up 3, and then you get that wash over the next couple days, like we just did, you're done. You know what I mean? You're done. Where if you're looking to buy off the pull, even if you're a little early with sentiment and flow still on your side, there's a good chance they're going to support these names and you're going to catch that wave of rebound. That's kind of the logic there. Now more than ever. At least you have a shot. You have a better shot when you're buying weakness. All right. So that's the stuff I think we got to keep an eye on until we see some signs out of flow they're going elsewhere. That would be an extremely bullish sign, in my opinion. If we start to see them get aggressive in other spots, biotech or the trannies, transportation, there's so many. But what we're seeing selectively, you could basically count maybe on a couple of fingers, some names that are catching some legitimate flow. But other than that, they're not seeing anything. I mean, they're seeing very little, if anything, even when we're in a squeeze type environment like we were Friday. Here, let me show you a couple other sentiment stuff. Then I'll show you some of the sweeper activity off Friday. Like I said, small. Here was the Micron flow, by the way. Like this name, in my opinion, this is the name. Like I was telling guys in the room, like that's where sometimes I beat myself up. I'm always looking for other stuff. I want to get cute. Where this was the name right here. This was the name to swing. This was the name to keep an eye on an intraday basis as far as weakness is concerned. Like, this is special action right here. And it's pretty obvious why it's special. This is not just a couple big bets, missile bets we saw in July. I mean, in the July strikes at the bottom, and that's it, right? Sometimes you see just that, and that's more than enough. This thing gets tattooed every day. Every day. And remember, like you'll hear me say, a lot of times, guys, the action, they're rolling. I look at open interest the next day, hardly any of it rolls. It's all new buying. Maybe that changes, but all this week, it's all new buying. Maybe some of this rolls because of the Friday expiration. Obviously the March 2nd calls, whatever they were playing some weeklies early on. They're going to roll out. But, March, April's tattooed. July is the Tepper guy. He continues to swing away there. Just incredible action. And any weakness on a name like that, when you see action, will get support, will find support. The buyers are always going to be there. It's only a matter of time. Only a matter of time. All right. So what else we got? Here, this is some of the more intermediate term sentiment stuff. Equity put the call. You could see. Remember, we were talking about this spike here nailing the lows. Then look where we got to. That's a big shift in sentiment that quick. All right. So little by little, thanks to this week, we're back up here now. If there was some weakness, we probably, again, going into Friday, that's what we were looking at. If there's weakness Friday, what's the likelihood here? That goes boop. So that's why we were looking for flow into weakness Friday more than any other day. Okay, but we had the reversal, so not much of a change there. What else I got for you guys here? Here's the sentiment trader leveraged ETF buying, the bearish buying. So this green area is the squeeze zone. This is where, the action was when the lows came in. Then, they unwound off that rally. Players less interested in that stuff. And then Thursday, boop. So again, adding to the thought process of coming in Friday, any weakness should be looked at as a buying opportunity. And then Friday we had the reversal in the market, so not much change in a lot of this stuff because we didn't close lower Friday. Here's another one I look at. Again, more intermediate term, really not too shorter term. Lags a bit some of the other stuff. That's why it's intermediate term. This was the lows in the green, neutralish. That's pretty much where we got back to. And I think those are the most important ones that I wanted to share with you guys. Let me get to the flow there. All right, so going forward here, what we take from all this is, like I mentioned, tech into any weakness next week. Look at any call sweeper activity as an opportunity to get long. All right, we're not at any major bottom levels as far as sentiment on some of these other things. Okay, but right, logic, weakness. If there's any weakness early next week, where will these things end up again? Okay, so that's what we got to keep in mind. And again, lean tech. All right, here's some of. Let me start with the bigger one here. Here's some of the sweeper activity, just to give you guys an idea. All right, and like I mentioned, selective, good-looking buying out there, right? The X, as you guys know, caught that missile before the tariff news. Shocker, right? And exploded that next day off the tariff news. There was some weakness, caught another big bet. You know what name looks interesting? I hate names that are in the news. Now you got the steel tariffs, and you're going to hear steel being spoken about constantly. There's a lot of news there, so you can expect volatility. But let me pull up the other chart there. AKS has been seeing some big time action. Now this is the laggard of the laggards in the steel sector. Okay. All these steel names, you remember all the ones catching action? Nucor, Steel Dynamics, X, all of them look incredible. They've looked incredible. This thing can't get out of its own way. And Thursday, again, off the news, there was a 40,000 contract buyer. And then some interesting shorter-term end leap, Jan 2020 activity was detected on Friday. So something to keep an eye on, this name. Again, I'm not the biggest fan of this now because the tariff news is out there. You have the risk. What happened? Listen, Trump's nuts. You saw what he did with X on the day of tariff news. What happens? He comes out and tweets, "Oh yeah, it was just a threat. I'm just looking." You know what I mean? You never know with this guy. So you gotta be careful. Right. CLF Maria's talking about. That's another one that caught action. All right. So that's what you got to be careful with there, especially chasing green. You might be able to play some red for a trade or some action. But I wanted to mention, even though we were talking about that X bet, that AKS, there was some big time order flow there on that AKS, and she's been a disaster. Yeah, Maria, good point. CLF2 action and has been a laggard and had a bump up this week. But like I said, I'm not crazy about that stuff now. I'm not crazy about it because of the news out there. I like that X buyer prior to the news. We were talking about that in the room. But now, now that the news is out there, I'm not too crazy about it. Here's more Micron action on Friday. Some of the opening sweeps. March 9th, 51 calls. Sweeps multiple exchanges. May, 55 calls. They've hit every line. Every line. Yeah, $500,000 sweep here. It's like water. It's like peanuts right now in the micron flow. $500,000 sweep is like this thing, 143,000. This is like not even worth paying attention to right now. That's how ridiculous it is. What else did we have? Walmart. Look at these sweeps. This is the Friday action. Okay, so this is why I wasn't too excited. Again, for all of us were long in the morning in the room, all of us. Okay, but as far as like in comparison to the missile activity we saw into the lows with Micron at the initial lows, there was some real standout action there. They really put their money where their mouth is. There was some confidence. This, peanuts. Again, you see enough of this, it's going to create momentum on an intraday basis. But any further momentum, we need to see the flow continue into next week. That's what I'm getting at. CRM, another name. Again, you guys don't usually hear me talk about names that have been hot like this. But if you do see weakness with the type of ranges we're seeing out there, the type of movement, there's trade opportunity in here. This thing caught a ton of action, has always caught a ton of action, right? Had that pre-earnings thing. That's why it was tough to pay attention to. And then the day of earnings reversed off the highs and caught June missiles. No rolling, clean as a whistle. June missile activity. It was into strength, but you could see here, faded off the highs on this day. So it kind of Netflix saw a similar activity post earnings. So keep an eye on this CRM, especially into weakness. You know what I mean? They'll probably come in right there, sweep it up. What else we got going on here? Oop, where am I here? I get lost. There we go. So what else? We have the Walmart, the CRM. There's another page here. Oop, wrong one. AMAT. That's another name. You guys remember AMAT littered with sweeper activity prior to earnings. You had the tech pull that took down AMAT with it before AMAT announced. They kept sweeping calls. And then AMAT announced earnings, still seeing sweeper activity, and to this day continues to see bullish sweeper activity. Okay, nothing huge here. $150,000 bet, small sweep for AMAT. But again, one of those tech semi names that they're just seeing all the flow. Macy's, there's been a good amount of flow in. That also had earnings, was up on earnings, caught a little more action, small sweep. JP Morgan, some sweeper activity Friday. March 113 calls, little bit. Snap, they were aggressive with into Friday morning market weakness. Snap could be a little pain in the ass to trade. But you guys know the story there. Caught some flow pre-earnings, did nothing. And you had to hold through earnings to benefit from that. Caught post-earnings flow. Then you had a wash here. And Friday, there was some sweeper activity right out of the gate, early morning. What else we have? So this is it right here as far as sweeper activity. Yeah, there's a couple names on here, several names on here, but it's more, in my opinion, of, I like to call them Momo sweepers, momentum type sweeper activity. Okay, and when we see a rush of this, can create some real nice upside. You know what the pain in the rear end, the pain in the ass was Friday? I really wish I could have Friday back because I didn't lay down as big as a hammer as I would like. And I'll tell you why. I came into Friday, I was ready. I said to myself, weakness, I got to be ready here. This is the opportunity this is where I like to make the bulk of my money, where I take a big swing. Okay. I know tech is what they're focused on. So, and the semis primarily, even when the market was skittish, the semis continue to catch action. They were probably sniffing out that micro semi deal with MCHP. Okay. So I was hoping for some semi activity. That's where I was going to lean. And so, make a long story short, we got the weakness. We got long off the flow. I played a couple things, Micron. I even played a little US Steel for a trade. I played a couple things. But what happened was, let me pull up this. Yeah, there were some decent winners. And then the market kind of went dead, if you remember. Okay, so here is the, let me pull up a 5-minute show. Just so you get that, I want to be honest with you guys. It's never as easy as you would like it to be. That Friday it was, because it came a little later in the day, and basically you just got long and, just went crazy to the close. But so we got into the early weakness. You got this move here, and then the market and the flow went dead. Okay, the market and the flow went dead. So basically, I sold whatever I was long. Once the markets went green, I was just looking to sell whatever I was long. And I never really got long much of anything else for the further push into the bell. So I feel like I missed half the squeeze, if that makes sense. And the market pushed to green, remember, and then came back down into red. So it wasn't like I even had to chase more green to get involved. The market came into red, but the flow just wasn't there. I was a little hesitant to fire at certain things. It wasn't there. So the bulk of my money I made early on, but this opportunity, and you rarely get that opportunity, was just a complete waste. Because like I said, if this just continued further, yeah, I wouldn't be as frustrated because, I took my gains and didn't want to chase green. The market pulled back into the red. Not tremendously into the red, but went from up decent to down, and there was another opportunity there. But the flow wasn't as accommodating as it was initially in the morning. There wasn't that rush. There wasn't that rush of buying. But guys, again, these moves intraday, if you're a trader, you gotta look to take advantage of that. Even like what I did, I'm frustrated, blah, blah, blah. Yeah, you look to lock those in because you're seeing moves now. Back in, November, you wouldn't see these moves in 3 weeks, movement like that. You know what I mean? You'd have that slow melt up. Now you get, Win was another one, that court action. Oh, I didn't show you some of the bigger bets. Win court action was down, I think $4 or $5? I know $4. Might have been $5. Just melting. And then caught some real good looking action. May again. This guy keeps coming back in May. And this thing went positive. So think about it on any other day. Like if you buy Win and it's flat, right? Put yourself back into last October. You're an active trader. You bought Win. It's flat right at the open. And now it's up $3-4. Yeah, that's a nice little hit intraday, So you got to try to get that greedy thing out of your head if you're an active trader. But yeah, on that note, Win again, May calls. Somebody's out there really buying some May calls. Hefty May calls, laying some wood. So a little bit of time there. You had that shake and bake. I wish it would have closed up a little bit more on Friday. Would have looked incredible, but nice little shake and bake. Shook a lot of people out there. But yeah, so again, we're seeing selectively some decent action out there in selective names, but mostly tech catching a lot of the momentum type action. Let's see here. Hold on. I think I put it on private Twitter so you guys could see. And then we'll get to your names, guys. This is a thing we look at under the hood bull flow. Basically, what this tells us is puts going off at the bid, calls trading on the offer. So this is some under the hood type flow that may not catch our eye. Some of these names do catch our eye. That's going on out there. You know, whether they're closing puts, that could be bullish, or selling puts, which is extremely bullish. You know, it will be on this list. And call flow in general. SGMS, some buying into the weakness. That always seems to catch some flow. You know, so some names on here. This DISC has seen some bull flow recently. So that's a list we look at. And here's the win action. So here you got this block buyer, May 170s. Then you got this sweeper, May 155s. But all the good, you can see all the good looking action coming in May for the most part. There's been some spec action, like out of the money, crazy, stupid stuff mixed in there too, which I wonder if there's a rumor on the horizon. You know what I mean? Based off that. Yeah, but the stock, you want to hear funny? I'm only in, basically a runner right now. I actually bought weakness there and sold it because I had a decent profit, and I'm a degenerate with a quick trigger. So I was looking to get back in and never did get back in. But I got a couple other swings out there. How about this? I got DHI, where I'm getting this, well, you know, as a swing position, nothing huge, but I'm getting beat up on. You know, those calls are a disaster. So not everything is rosy. These home building names, no interest. And you had that Bill Miller action. So he's probably getting lit up too. We'll see, you know, we'll see if I got time on these things. So I got time on them. But the best, even for swing purposes, the best stuff has been mostly tech. Mostly tech. The other stuff hasn't done a thing. Yeah, little bits and pieces here. All right, let me get to some of your questions, maybe some names you guys got, and we'll take a look at some of the names you guys got. Probably have some interesting names. Maria's talking about AIG. What's up with all that buying? Interesting name. In my opinion, Maria, the AIG was all Nigerian. There was a little bit buying there, and then somebody sniffed out that Nigerian was going to tout it on halftime show, and then the action ballooned. So that's where the action really heated up, I think, off that. So you just got to be careful because it's a Nigerian pick, public. You got a lot of public money in there, and usually at the least it will be a rough trip. You know, it will be a rough trip. But that's where the action, you're probably talking about all that volume. That was because Nigerian pumped it on the halftime show. Samir is asking, did you see March 46 puts in Square before earnings? Yeah, there was some put buying. There's been some call buying post earnings, small. But Samir, to be honest with you, you know, pre-earnings, there's put buying in several names. So I'm not going to lie to you and tell you that it stood out to me. But yeah, I remember seeing the Square put buying pre-earnings. You know what I mean? Artie's talking about the AMD flow. I think I posted it too, but if you want a good explanation on that, Trade Alert wrote up a whole thing on it, mostly tied on it, nothing clean there, that size. See right here, click on that link. That's Option Alert, Trade Alert. They basically power the data. They're the data in the steam room. So if you click on this, that's his Facebook link. He explains And it was 2 straight days, I think, of puts. Here is, they were tied though, anyhow. To make a long story short, they were tied. This is it. See, from the day before. Size delta neutral put buyer returns for more advance, blah, blah, blah. So, tied to stock. Ranchero, what's up, Mr. Ranchero? Did I see anything on AYX? No. What name is that? Sounds familiar, but I didn't see anything there, I don't think. AYX. That's a semi? Trades options too? These semis. Oop, hold on. I X'd out your questions. How do I do this now? There we go. These semis, they all look good. Let me rattle off a couple names. I know you guys like to trade it. LRCX. There's been some flow there. I can't believe this thing was down that much Friday morning. I can't believe it. I traded this thing a couple days. It's a mover. So it can move. I don't know about the options, how liquid they are, if you can day trade them and stuff like that. So it might be tough there. But LRCX seeing some flow. The two that merged has seen some decent action. They're done now. MSCC. Believe it or not, MCHP was seeing the better flow the couple days prior to the news. AMAT, even Qualcomm seeing a little bit of flow. CY, smaller semi name, Cypress, seeing some buying. So again, a lot of flow in several of these names. If you see weakness there and you like them, they've been strong. RH, Renato's asking, RH, you want to hear a funny thing on RH? You guys probably saw me posted on Twitter on Friday. Huge sweeper comes in, right? Huge. I was like, oh my God, we got a missile. I don't believe it. We got a missile into weakness. I got long immediately. So, make a long story short, maybe 2 minutes after the order hit, I see on the tape, cancel. So it got canceled. So now, raise the stop. I actually got lucky, made a tiny bit of money on it because it traded higher anyhow. Probably people didn't realize it canceled and there was some momentum. But he fat fingered the trade. So instead of 3,000 contracts, which we thought there was a sweep for, which would have been the biggest sweep I've ever seen in RH. There's been some big blocks in RH that have done extremely well. This by far would have been the biggest sweeper I've ever seen. Make a long story short, instead of 3,000, the order was for 300. So he fat fingered a zero. So that's the story on RH. And here was the bet. Where is it? Right here. So look at how excited I got when I saw this. Right? Wait, come on. Hold on. I get drunk. You see that RH bet. April 80s. Almost 3 million. So a lot smaller there. He still was a bullish order, but more of a normal type bet in RH. He fat fingered a zero. Tim. Oh, Tim brings up some interesting action. Yeah. TLT had some interesting action there. Let me show you guys what went on in TLT. Let me get this off. Hold on a second. So TLT, and Tim, you remember me saying that's something they can really come after. Some ETFs catch a sweeper here and there, and that's about the extent of it. TLT, when they want to get long, they really come after it. And what happens is, because it's a treasury ETF, not really a name that gets out of control. It's more of they accumulate it. You know what I mean? So you'll see some action, you'll see some more action, you'll see some more action. Me personally, I like to pay attention to the sweepers there as opposed to the blocks. One, it's an ETF, and two, it can give you a signal of maybe when it's time to see some movement. So we've been seeing a little bit of action there. There's been some block action, but the sweeper activity is starting to pick up a bit, especially Friday. All right, so we have this sweeper here, May. So again, some time there, but May opening sweep, decent size. That order looked like this, by the way. May 117s, 320, they open. This is action, more of the action it can catch blocks. There's an opening April buyer there. I'm more impressed with this. There's another one here. This is a block. March 29th, 122 calls. That's what it looked like here. 5,000 of them, 37 cents. And here's the volume on those Aprils, 17,000. And this was the volume on that. So basically, Tim, there's some buying there. I would pay attention to the sweeper activity more than anything. This is the order I like. Out of all the action it caught, this to me was the most impressive order there. You know what I mean? It got aggressive. A block could be anything, Tim. In an ETF, so many different things blocks could mean. So, but you do a good job of it. Tim's a member and a really good trader in general. And especially the way he utilizes flow, really knows his shit. So anybody who's in the room, you guys probably know Tim, but if not, you should pay attention. A lot of technicals and stuff like that. Really knows his stuff. But Tim has pointed out that the TLT action has turned bullish and becomes interesting because this thing has been so out of favor. All right. So something I would personally keep a closer eye on, Tim, unless you want to utilize May, that sweep, as a partial entry type thing. But I would try to pay more attention to the sweepers than the blocks. Listen, you catch both, that's all fine and dandy. But I think the sweepers will tell you more than the blocks will, as far as what type of move, when, time frame wise. But this is something they will continue to be aggressive with if they like this setup. So the flow shouldn't end. We should see more flow, and it should stay and look the same, bullish. You know what I mean? So definitely something to keep an eye on if you like to trade this thing, without a doubt. And listen, you talk about the other side of the trade. There are more shorts in this thing than you can possibly imagine. You're not going to find any more lopsided trade than this. And Tim is mentioning, if we see, here's the thing, Tim, more than just one shorter term sweep, I think what you might see, it may not happen, but the real trigger would be that Uzi type action. So I'll give you an example. You see me or the board hit and I post, April sweeper, TLT, blah, blah, blah. Then a couple minutes later, another April sweeper, blah, blah, blah. Size April sweep. You know what I mean? That pace, that aggressive pace, that would be the strongest signal to come out of flow. Ranchero is asking, what's Tim's name in the room? Option trader or something like that? Right, Tim? What are you, option trader? Yeah, option trader, and the word trader has an 8 in it. You probably see him all the time, Ranchero. You probably see him all the time. He posts a lot. By the way, Tim, Ron just said, "Oh, that Herb? I didn't know he was Tim, so he knows who you are." But most of the people, he posts a lot. All right, so TLT a must watch, especially if the pace of the action starts to pick up. And let me tell you, if you like the TLT setup already, I think you can already start to maneuver for an entry. There's flow there. But for that strong signal, You guys remember, and listen, sometimes I get a little too picky. That's my problem. I miss a lot of winners or miss telling you guys about a lot of, big winners that come out of flow. Okay. But you guys remember, like with Micron. Okay. And remember, you guys were asking me every week, every day, every Saturday webinar, Micron, so a little bit of flow. What do you think? Micron. And what I kept saying, yeah, there's some flow there. Maybe buy on weakness, low end of the range, but the trigger is going to be Tepper. Those Tepper sweepers. You want to be patient and wait and see if they pop up again. That will be your sign that this thing is ready and in play. There was a chance he may not come in, right? We can't predict the future. So that's the risk you run. But if Micron is on your watch list and you see those Tepper sweepers fire and you hear me screaming Tepper sweepers in the room, that's your trigger. That's the signal. That was the signal there. And why? Because Micron catches flow. Micron's an active name. Since the Tepper sweeper started in this thing way back when, and this thing got hot, there's always flow in Micron. So the thing to look for there is the guy who started it all, the player who started it all, the one that for sure, well, not for sure, that's the bad way to put it, but the one you really can feel confident about starting to get some momentum going, and that's what that is. So in comparison to TLT, the trigger there would be the pace of the action. Because it's an ETF, you don't want to see sporadic buyers here and there. It can work out again just based off sentiment and the technicals you're looking at. But off flow itself, you want to see the pace of that action start to pick up, and that will signal to us, okay, they're ready to squeeze these bastards. You know what I mean? Because what happens? If they continue to get aggressive, right? If that pace of the flow starts to really quicken up here, that will create momentum in itself and get shorts to possibly cover. Okay, market makers, hedging, all that jazz. So even if you're a little late, if you're looking to time this thing right, that would be the trigger there. It may not come, but that would be the strongest signal out of flow there. UPS, UPS had action off some news though, right? So that's why I wasn't too crazy about it. Wasn't Buffett? Who is it, Mike? Wasn't there somebody involved there? So that's why I wasn't too crazy about it, even though there was some size there. So that's the one knock. Similar to like what I explained to you on the X. Before the news, I like the action a little bit better. Now that the news is out there, everybody knows about it, right? Everybody knows why they're buying X. It becomes a little different. Not that it still can't work out, but it becomes a little bit different. UPS, there was flow on a day where a Buffett stake. That was the chatter. That was the news out there. Namesh is asking about the AMD put action. No, I don't know if you were around 10 minutes ago, Namesh. I spoke a little bit about it. It's tied action, so it's really no directional play there. If you go to the Twitter handle Option Alert, they break it down for you if you want to know exactly what's going on. Option Alert on Twitter. That's Trade Alert. They broke down the action in detail to explain what the hell they're doing there. A Pie is saying, Win seemed like really good flow on Friday. Surprised it wasn't mentioned the top flow. Can you explain? Well, Win is there. That's not, Win's been seeing that. That's why we're talking about it. But Win, they've been buying throughout this whole thing here. So yeah, there's been top flow in Win all May. May calls. You know what I mean? So yeah, there's a huge buyer out there of win May calls. There's no doubt about it. No doubt about it. Ani saying, how do you play the under the hood flow? I wouldn't say necessarily play. It's not actionable like sweeper activity can be actionable, right? Certain sweepers, you look to take action right there and then. I think it's more of watch list type information. You know what I mean, Ani? So you may see a name on there and you may see a name pop on there a couple days and it's obviously bullish. So that's something you should keep on your screen, keep a look at. And then if you see sweeper activity come in, you just save yourself a lot of time there, right? I know you like to look at charts. You already looked at the chart. You already know that there's been some bullish flow in the name under the hood. And now all of a sudden, you got a notable sweeper in the name. Now you're ready to press some buttons. So I think that's the way, well, that's the way I use it and have used it more for swing trading, by the way, not day trading. And, just in general, if you're trading anything else, you may see names on there that you're interested in that is not catching sweeper activity, but you like to set up. There's a lot of people, a lot of traders who they don't trade just solely off flow. They use flow as an indicator and may find a name on the list that they already are interested in that's set up nicely, and that could be an opportunity. So the answer to the question is not actionable off of that itself, I guess is the best way to put it. Yeah, I see a couple of you guys mentioned STZ. That was another selective big bet out there. They came after a couple different lines there. Recently, they're buying, what are they? Julys, right? Julys. There was some April sweeper activity into the initial low, into this spot here. And then recently, some big time July call buying. And I mean big time. So, that's the point I'm making, guys. Like you see, very selectively, you got Win, STZ. You know what I mean? It's not broad. It's not a particular or a group of sectors, right? It's not several biotechs that caught some good looking. It's basically tech catching all the momentum activity and some good looking action. And then you got STZ, Win, selective names, all with, and somebody asked me this, all with time behind it. And what I mean by time is they're buying July here. Okay? And they keep coming back and buying July here. So we're seeing a lot of that. And from my experience, when you see a lot of the sharper activity, like, for example, we're seeing a lot of July activity in general. It just tells you the shorter term, they're looking to avoid. There's some uncertainty over the shorter term. Like I give you an example. Intel, right, caught that missile, if you remember. And I think that was that March? I think it was March. I think it was March. So I have no problem with time. You guys know I like time if you're looking for big winners. But when you see the sharp money, the quality, sharp action, all with, it's obvious they're buying time. It tells you a little bit about the environment out there. That's all. Now at the same time, let's say STZ, all of a sudden we see them get aggressive again in April. That could be a signal that they think this thing can start moving now. Right now, selectively, they're picking their spots like Win. It's catching other nonsense activity, but the best action, May. Stock comes in, down 3, May. Stock is down $4 or $5 on Friday. He comes in to take advantage of it, May. You know what I mean? So that's the smart money's taking that approach right now. Disney, you had the July This is daily, right? So Disney, you had that July missile come in, had a nice move, and then got caught up in this whole little market turn. Well, this was the market too, helped it out. And I think they came back and added not as big as the first time, but some Julys again. You know, Julys. Again, July. There's a pattern here. So, yeah, listen, it gets tricky. You see, like July, you tail something or you make a play off a July big bet, and you pay so much attention to the intraday activity, and in reality, they're going after July because it's all short-term noise. The way they're looking at it, just simply put, they think once we get through this little period, this is a good entry for win over here with some time behind it. Not a quick trade. They think over the next couple months, this entry is a profitable spot. That's how they're playing it. And listen, sometimes you see moves off some of that longer term call buying. You see some movement over the short term. Yeah, but a lot of that, you got the market that usually helps out. There's a lot of factors in it. You could take advantage of it. See, like when we were talking about it, like who was it? Oh, I thought it was Ranchero. Somebody else. It's Fidel in the room, another member. Basically, he initially was going to look to get long win based off the Mayflow or into weakness. That was his approach. But he found himself trading it now. Because what he does is he looks for weakness. That May sweeper comes in, he buys it, and then there's a $3-4 move that he's got a decent amount of money on profit-wise. In this mess where the stock could come right back to where it started 5 minutes later, he thinks the best move is to take it when he's got it. He's done that like 3-4 times already. So Action Jackson saying problem with Disney is that Comcast is effing up the acquisition plans. Yeah, here's the thing, Action Jackson. I don't try to get too wrapped up into. I get it. I agree with you. I don't get too wrapped up into the reasons why, because a lot of times the smart money is buying when these things aren't looking their best. That's the way they operate. Case in point, you guys remember EA? Now listen, you're 100% right. That can weigh short term on it, Action. You know what I mean? So you're 100% right. That maybe you don't need to rush, or maybe you find a spot, put a starter position on, wait, look to add if there's weakness, so you could take that approach. But like EA, okay, if you remember when this thing started to catch that missile activity, remember the disaster around EA? Oh, I don't even know the details, so I sound like an idiot maybe, but oh my God, what they did, the Star Wars game, no one's going to buy the game. They're losing customers. They're losing this. Why would they be sweeping EA? And over the immediate short term, the stock continued lower, if you guys remember. And they kept adding, and they kept adding. Remember? And then all of a sudden, we actually got the news of who the hell was doing that. Somebody announced a big position in it. Sharpie. So that's why I don't try to get too wrapped up into the details of what's going on, AJ, on the sharper activity. But you make a good point that sometimes maybe you don't need to rush when they're buying time because of the negative overhang over the immediate short term. Ranchero saying STZ. Yeah, we were just talking about it, Ron. I don't know if you went to the bathroom a second ago, but yeah, STZ, July, big time action there. Big time, and they keep coming back. Oh, you got a coffee. Nice. So again, these are the names you may not need to rush to put on full positions. Okay, you run the risk that the market, I think the risk here is the market squeezes and takes these higher with it. You understand? That's kind of what happened with Disney in a sense. You know, you run that risk. But as far as the name itself, they're going out further in time. You know, you look to buy weakness. That's my point. Like if you remember on channel STZ, I think one of the days, I don't know if it was the first day, but one of the days it caught activity, I think the stock was up 2. You know, so me personally, I wouldn't put a full position on up 2 in July calls in this market. You know, I don't see the reasoning for do that. You know, so what I would do is if I felt the market may squeeze here, run away, or I felt this STZ could get loose at a spot, I would put on at least a starter position to be on the safe side. But I would look to take advantage of weakness. That's the most important thing. I would look to take advantage of weakness. You know, if you did that, like with EA, okay, and listen, I'm not talking about averaging down, guys. Let me make that clear. That's a completely different animal. In other words, I wouldn't put on a full position. If it goes lower, buy more. If it goes lower, continue to buy more. That's not what I'm talking about. Because just like anything else, there are losers. Any one of these things can be a loser. Any one of them. The best of flow could go down, especially if the market shits the bed. You know, you always run that risk. So what I'm saying is, instead of putting a full position into green that day, putting on a quarter of that position, right? So now you got 3 quarters left to go. You get some weakness, put on another quarter or put on the half there. You have the luxury of a little more weakness, put on the last bit of it. And at the other side, and put on a quarter. Stock does nothing for a couple days, a week. Add the other quarter, right? You see, maybe now market's firming up. This thing might be ready to go. Blah blah blah. You could add to it, but at least you gave yourself. You did it over time. You know, in this type of market condition where you don't have to chase green here. You don't have to chase green. A green name might be red in 10 minutes in this market. You realize that? You wait 10 minutes, you might have a better entry in that name. That's how crazy this market is right now. Use that to your advantage. Ranchero's, what name, Ranchero? Win? Oh, Ranchero saying that's what he's looking to do at a certain number, lay wood. Yeah, so, STZ. So, you know, so that's the good thing is a lot of the more experienced traders in the room take that approach, and it's a solid approach. You got a bull market where things are popping like popcorn, or you know, like the Friday lows we had, and you think this market could squeeze a bit, and you want to get in something right there and then. You weigh your options. But now, where you see the volatility in there, there's no reason to chase green. No reason to chase green. Maria's saying she still likes the ADSK. You got to love the flow there. I love the flow there. The problem is, you know the problem. You got earnings when? Next week? So you got to roll the dice into numbers there. That's the problem. That's the problem. You know, listen, the options are well suited for that, right? If you're looking, if that's what you want to do, put in what you're willing to lose. You know the game, Maria. Right? That's the worst case scenario. If you put in what you're willing to lose, you can only lose what you were willing to lose. This is a good market for that. I think it's a better market for that than, loading up on equity, holding it to earnings. You'll chop your head off. SWKS, yes, has been a strong name. Had some decent, the better looking flow in SWKS came at the end of last year. Has had some action, but nothing exceptional. May 120s. Oh, you've been playing May 120s. Yeah, this is, you could see, look, strong name. That's another name, by the way. I'm glad you brought it up, AJ. That coincides with all the other semi/tech names we've been seeing. Like names like Intel, guys. there's so much demand call side for this thing. It's incredible. It caught it caught that missile, and they were a bit early. I think it was on this day, so it was the day before those Friday lows. Okay, caught a huge sweep, good looking sweep, and sort of staggered out of the gate. Couldn't get out of its own way. Finally started to trade higher. Most of the people who owned the name off that missile in the room got out, and then it started to get loose, which is frustrating. But there's a ton of action around this thing. A ton of action. There were sweepers there Friday. Microsoft, same thing. They were sweeping weeklies expiring Friday into weakness. But Microsoft, good amount of flow. So that's the approach. As traders, let's say early next week, we get a little bump up, and then there's another Trump event, little flush. We got sentiment accommodating like it is right now. If any further weakness, sentiment still there. You see some action. That's a nice spot for a trade. The bigger winners, I think, the ones you want to give a longer leash to, you're going to have to. You have no choice. You're going to have to pay for time. You have to. Unless you're just relying on luck and hoping to catch a market wave higher, which is possible, but you need to get lucky. And at the same time, here's the other thing you don't want to do. Okay, and you know me, I'm as bullish as anybody else. You do not want to get too long at one spot. Okay, you don't want to do it. Because if there is some sort of event lower, you know what I mean? Or the market unravels for some reason, you want to have bullets to fire there as well. It's okay having, a loser or losers, but you want to be able to take advantage of that further weakness if it's there. So you don't want to get caught long in this type of market all in one spot. Be patient. Be patient. I'm talking about the stuff you're looking to hold. You don't want to go all in here just because the market's pulled. What happens? There's new lows coming. Who knows? Nobody knows. I think that's why we're seeing this volatility. Nobody knows. I mean, my opinion, I think this market does what it's doing for a bit of time here. And every time you see sentiment get too bearish, they're going to squeeze them. They wash out some of those put buyers and protection buyers. You'll get a wash. And we're going to continue to see that ultimately until this market makes a decision whether we're going to another leg lower or we're going higher from here. But this is all part of correction / breather that's going on here. Anybody else? Did I miss anybody's questions? I'm pretty bad at scrolling through these questions, so I apologize. Anybody else have any questions as far as flow strategy or anything else? Let me see if I missed anybody because it's rude. Ranchero saying there was a total head fake. The only reason I held SPY calls. You're talking about the flush on Friday. Yeah, you could just see everybody getting all riled up on the tariff news, right? You heard people literally calling for Armageddon, like the economy was going to blow up Friday because of that. And you saw the effect everywhere, all the sentiment stuff we look at, we saw that everywhere. Saad is saying, not sure if you addressed my question about Boeing and tariffs. No, I did not. Boeing, we saw some flow there throughout the market rally, some smaller sweeps, out of the money sweeps. Me personally, I'm not too crazy about this thing up here. You know what I mean? It's more, just on an individual name basis. I think it can be traded if you see flow, but I don't think there's consistent enough flow to trade it off weakness. In other words, you see Boeing down 4 and there's a call sweeper there and you want to get long for a trade, I got no problems with that. But as far as anything more than that, this is tough, guys. You know, this is basically what I was telling you on every single name out there you were asking me about last year, late last year. This is tough up here. This is tough. You know, like cat. You know, look, like remember you asking me questions about cat over here? I mean, what can I tell you? Well, so now you're getting a nice little wash here. You know what I mean? People are making a big deal about cat, like this thing went to zero or something. Look at this thing. I mean, give me a break. Look at this thing. This is totally normal, if you ask me. No? Could even go even lower and look normal. Look at this move in this thing. This is Caterpillar, folks. This is not some parabolic internet name. This is Caterpillar. Look at it. This is the weekly. You know? So let it chill out. Let it chop up. Let it do its thing, similar to like a Micron was doing for a bit of time. I think time more than anything. I don't even pay attention to how low it ends up going. You know, give it a little more time, and then we'll see if some good-looking action comes into it. AJ saying funniest Wall Street Jesus quote from the Saturday Sweep series 2 weeks ago. If I get a dog number 7, I'm gonna name VWAP. Oh, VWAP, I love that. I just love the sound of it. I don't think I've ever used a VWAP on a chart in my life. But that would be a cool dog name or a Twitter handle. No, I did not see your question, OC. Where are you? Web? What the hell is that? I didn't see your question. Baba, good name, Victor. This is a candidate, I think, for a good-looking order. We've been talking about this one. There's been spec action in this thing. Weekly spec action. And there's been some big orders, you know what I mean? Like blocks and stuff, but not the type of action you want to see in a Baba. And I think it's just one of those names that's been driving people nuts that if you see some legitimate sweeper activity come in, preferably into weakness, could be a decent spot to get long. You know, had a nice wash last week. I was hoping on Friday. That's another thing. I was hoping on Friday for one. And, you know, had cheap weekly crap. So that's part of the reason I was frustrated on Friday. Here's the question from OC. What do you think about TLTJ? They came. Yeah, we just talked about, I don't know if you were here, OC. Option Trader from the room was talking about it. And we went over the TLT flow. I like that May sweeper, the best of them all. I think the trigger there off flow, if you're really waiting on something there to signal that this thing is ready to squeeze them, I think it's going to be the pace of the sweeper activity. So looking for that Uzi style type pace we see OC come in, because it's an ETF. You know what I mean, brother? The problem is, you know, a buyer here and there, yeah, it may work out, but they're ETFs. You know, it's ETF activity. But if we see sweepers really start to get aggressive there, and I know they can get aggressive in this name. I've seen it many a times before. You know, they can pile them up in this name. I'm talking about 50,000 contract pileups. You know, where they just come in, bing, 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 bing. And the good thing about this, anything else that would trade that type of sweeper activity is gone, right? You only have a little window where you got to get in because that momentum is just going to explode. That's not the case with TLT because it's a treasury ETF. You have time to wait. And you know what I mean? Like you'll see it continue to pile up and they'll continue to hit it and then they'll fade and they'll continue to hit it. So you don't necessarily have to be in a rush. That's the good thing. So the same answer I gave Option Trader earlier, I'll give to you. If you like the setup already, I think you have some flow there that you can fire if you like it already. But off flow itself, I gave the Micron example, like waiting for the Micron Tepper sweepers to come in. If you're waiting for the strong signal there, you're waiting for that Uzi fire style type activity on TLT. You know what I mean? And you probably understand what I'm talking about. They can pile them up. Similar to like, it's better than the USO, but like a USO. USO can catch activity here, there. To me, it's really meaningless unless you like the setup. But USO, I've seen them several times in the past pile up 80, 100,000 contracts, just continuously taking a good portion of the day and sweeping the living daylights out of orders. And that would be the signal there for USO. And that's the type of thing they can do in a TLT when she's ready. And I think there's a possibility of that, OC. I don't think it's that far-fetched when this thing is ready to see that. I don't think it's far-fetched. You may not, and it may go, and you may curse me out, but I don't think it's that far-fetched to wait for that if you're looking at it. William Struck, what's up, William, is asking about FCAU. This name was one of the better names as far as activity was concerned when they came in and tattooed this thing. This is Chrysler. They tattooed this little dull sideways activity here and exploded. And now, with the market, with the steel tariffs and everything else, took a nice little dip here. There was some buying Friday. Maybe that's a sign of them really, they're going to really come after it. But me personally, I would wait on that unless you like the spot. I would wait on that. Off the sweeps Friday, I would have it up on my watch list. Exactly. You know what I mean? It got my attention, but we already know, when they're excited, we already know how they buy this thing, right? We saw it. We saw their hand. When they want this thing, I've seen that a couple of times, William, not just that last time. They did it several times in this name. They pile them up. So maybe they're just nibbling, feeling around. That's probably what they're doing on a lot of these things. Because again, guys, outside of a couple names, besides tech and, mostly tech, some high beta, that's the only thing they're interested in right now. That's the only thing that has any juice, for crying out loud. Everything else is dead wood. And Wynn is a perfect example, but Wynn has some, with the CEO and all that crap, but it's just dead. Now they're buying it into that death, which is probably a good thing. Okay, but it's just dead right now. Like a lot of other things. All the heat has been coming into tech, semi, the Netflix, all that stuff. And we went over the reason for those of you just coming in. I think it has a lot to do with this. You know what I mean? Speculators on the other side, on the short side of tech. And I think that's why they're still predominantly focusing on this stuff. So again, as much as I like to look for rotation and all that stuff, it'd be foolish for us to ignore this, right? It's stupid. Why would we do that? Why would we do that? That's what a lot of people are doing right now. They're ignoring it. Look at this. This is nuts. This is nuts. Considering they've been the strength, right? They've been the strong part. The Qs have been the strong part of the market, the leader in this market. But they want nothing to do with them, riffraff, which is weird. And hedge funds, by the way. Yeah, the bank flow has been solid. The banks have been solid. Just for me, it's hard to get excited about them. We were talking about this late last week. The reason why, you got this pull, you look to buy it into flow, that's great. You got a pull there, you look to buy it, you got a trade there. these things didn't even pull back. You know, they're just in slow grind mode right now. So the same thing, I think if you buy highs here, you're going to have a tough time. If you buy weakness, you can at least look for a trade out of it. You know, JP Morgan, same thing. Hey, like for example, you had this drawdown, right? In other words, that would be a spot you're looking for some sweeper activity for an entry if you're interested in the name. Then when you get to here, it's just not as exciting anymore. Yeah, it's still grinding higher, but then what happens? You get caught in the pull. You're waiting for more, waiting for more. Whoop. So the best of the bank activity has been Bank of America. That's been the best. That's the one that's the go-to bank right now. It switches from time to time, as you guys know. Wells Fargo is an interesting name off the recent poll, but we haven't seen any action there. You know, remember they got aggressive here, then they got aggressive on the polls. You know, then you had this here. So couldn't do much there. Now, Wells Fargo, you could keep an eye on missiles again, in my opinion. Yeah, so that would excite me more than the Bank of America flow that we're seeing up at the highs. You know, could grind higher and you get these whooshes. You could look to take advantage of these whooshes. Whooshes. Jorge was saying, or George, what do you think? But what do you think it goes higher? It broke 300 and SPY is bouncing back. Which name are you talking about? 300? Netflix? You're probably talking about Netflix. I mean, for me, Netflix intraday trade is the type of thing I would look at there. Yeah, this is tough for me now. I don't know what the hell you do with this. This is incredible. This thing is incredible. What's Netflix up this year? What's the percentage gain on Netflix this year? 50? It's got to be like 50% in 2 months. Is that possible? Holy crapola. That's got to be 50% in 2 months. Oh my God. Maybe more than that. That's nuts, man. That's nuts. So yeah, you know, wow, 50%. That's crazy, Maria. That's crazy. So that, you know, for a position up here, for me, you know, my style becomes tough. I think based off the flow, the juice in NASDAQ names and in general, you get weakness, you look for flow for that trade type thing into weakness. You know what I mean? But there's not much weakness. So that really limits your opportunities there. You know, Amazon too has been a rock, right? Been a rock. All the big names have been a rock. So we'll see. Ultimately, guys, I think again, this is my opinion, for the market as a whole to get out of this correction style, we're going to need to see major rotation. Major. I even think it's possible if the NASDAQ names consolidate, right? Go quiet, and we see rotation, I think it's even better for the markets. But right now, it's going to be hard for this market to find any, you know, traction aside from squeezes off weakness, without them paying attention to the other stuff out there that's laying dead. There's a lot of stuff out there just laying dead. Yeah, Facebook hasn't done too much, right? Facebook, we saw some buying with some of the action, if you guys remember, with the Micron action and all that, and you know, it's been pretty messy flow since. Been pretty messy. Some put buying, some call buying, some further out stuff. But yeah, it does look better than the other stuff. Been quiet, been dead. Nvidia, same thing. I think there's opportunity there, like the other tech names, George, off weakness. You got a lot of semi action, you got a lot of Nasdaq flow. So again, you get a pull like this. There's a good chance you're going to see some flow come in and support it. If you do, you got an opportunity because this thing moves in this environment in a day or two drastically. So you got to trade there. But that's again, if if you're an active trader, you look to be nimble and you're looking for flow into weakness, right? That's what we're talking about here. For anything more than that, the bigger move type stuff, you're going to need time. You're going to need time. Okay, because as we're in this market, what's going to happen is you're going to take 2 steps forward, 2 steps back at best. At best. So you're going to get a move. You're not going to take those profits. You're going to get a draw. And the way options are priced now, it's going to wipe out a lot of juice, those drawdowns. Nvidia, yeah, there was actually one put buyer in Nvidia, single order. I wouldn't pay too much attention to that, though, Victor. You know what I mean? Could be, who knows? Could be protection. The guy bought a fistful of equity. Now, if we saw multiple put buyers come into Nvidia and some of the other semi names, then I would be a little bit cautious. But, the other thing with Nvidia, you had the whole Bitcoin thing, but I don't think that's an issue anymore, right? Bitcoin's been rallying. The SEC investigation and all that stuff that was weighing on it. That was part of the weakness, right? So, but that's what I'm trying to do. I mean, my bread and butter is, especially in this climate, is day trading, but I am swinging some small stuff on the side. If I see decent action come into a name and I can buy a little into weakness with some time, I'm doing that. I'm doing that in a small way, but I'm doing that. But now in this environment for me, the bulk of my P&L is going to come off days like Friday, even though I didn't take as much advantage of it as I should have. That's where the bulk is going to come. You know what I mean? That's what I'm focused on. When I get sentiment lining up, some weakness, and then I get a call sweeper rush into that, that's where I'm going to have my better days. The other stuff is just, if it evens itself out, maybe I get a little lucky on some of my swing trades. I can make some money there. But, my focus right now is to take advantage of these ranges. Because if you can be nimble, you got some big moves on an intraday basis, even on a short-term basis, a couple days. But you got to allow things to set up. And we'll leave it on that note. What I mean by that is you get this opportunity, which was pretty solid, was a pretty easy read, that Friday. You got to look to take advantage of this, okay? And once you start trading up here, your number one objection is to not give back the bulk of what you made here. Remember there was somebody saying, oh, yeah, they joined the steam room. They had a great week. And I told him, I said, listen, you came at the sweet spot. You came at the day that we caught the squeeze off the sweepers, and we're long into this. Now, instead of trying to press and add on to gains, whatever you do from this point, make sure you're not giving these profits up in this. And allow it to set up again. Allow it to set up. So you want to get long here, ride the early stages of this, make some decent money, and then you kind of almost, I hate to use the word, but fooling around in a smaller way until you get another setup similar to that as a swing trader, One last one. OSTK is saying OSTK. They have earnings, I think, coming up, but there might have been a call buyer. Let me check it out for you because you guys like to look at that name. Maybe it was a put buyer. I don't even know anymore. Hold on. But I think you have earnings there. Put buyers. January put buyers. When's earnings, right? You have earnings coming up? Could be protection into earnings. But I'm almost positive you have earnings coming up there. So just be careful there, period. John is saying Ranchero style selling shorter term premium works well in this environment. Good webinar. Yeah. Yeah. That's why, he gets excited in this climate. That's why he gets excited in this climate. Yeah, but that's what it is. Again, it's almost the same as being nimble, right? You're locking in shorter term profits. What he's doing is locking it in by selling premium. And at the same time, right, he's stacking premium and long the name underneath. So it's the same, it's a similar thesis if you can't or don't want to be as active as you need to be. But yeah, that's why Ranchero's the Mac Daddy. Dean is asking, what do I make of those crazy puts in July? On the ETFs? Dean, it's tough. It's tough. I don't know. I really, I don't have a strong opinion. What does it tell me? That somebody out there is putting on protection in this climate? It's pretty obvious a lot of people are. You know what I mean? It's pretty obvious a lot of people are. Now, how do I know it's somebody getting aggressive betting on some downside? The only way I would know that is if there's continuous activity there, right? So like we're seeing with the win, we know there's somebody who's pretty bullish on May calls and win. Pretty obvious, right? Whether he's right or wrong is irrelevant. It's pretty obvious somebody's bullish on win into May. So that's what I would need to see off, especially any put activity, for me to think, he was betting with any confidence on downside. It could be just he's nervous. He doesn't feel good about the environment and putting on some real protection. That's what it most likely is. I think us, Dean, the way our style, no matter, you're a swing trader, day trader, active trader, the buying will tell you a lot over the short term. The buying will tell you a lot. The buying tells you a lot. For me, you see, if the market rallies on an intraday basis and sweepers aren't sweeping calls, I'm not participating. You understand? And a quick example, Friday, there was even call sweeper activity, but I wasn't excited about it. You know what I mean? It didn't impress me, and I didn't really take full advantage of it. So for me, the call buying tells me a lot. When there's a lack of call buying, and we had seen that prior to Friday, there was really no call sweeper activity. If you remember, Wednesday, Thursday, I was ranting all day long that the flow was disgusting, pathetic, are the words I use. There was a call sweeper strike in the market last week. They went on strike. And then Friday, in morning into weakness, they popped up. You know what I mean? They popped up. But prior to that, let me scroll back and you'll see. Yeah, the call sweepers were peanuts. A lot of red on the board. Like here's the board, and this is just the board. Mind you, a lot of the smaller action didn't even hit the board Friday. But where am I? So just so you get an idea, again, just off the colors. Like you had, right, some put action early on. And then all of a sudden, little by little, the board started getting greener and greener and greener. You know what I mean? And it looked different. It looked different. So, that's why the buying tells me a lot. AJ, well, you wrote a book there. What'd you write? You freaking rock. Thank you, Mr. AJ. I really appreciate everything you do, keeping it real. Thank you, AJ. Definitely helps fighting the urge to buy green, without a doubt. Help me lately paying ExxonMobil. Yeah, let me hear this. He's got a new rule in place for myself as it follows. If I'm going to round trip options on the stock, aka buy and sell, I want to hear this. Each time I successfully round trip, I go out a month further and get a better price than I did the first time, which forces you to wait for blood. I love it. I love it. Any little thing that gets you to buy weakness, AJ, I learned, is a plus. All kidding aside, any little freaking tidbit out there that you can apply that gets you more to focus on buying red and buying pullbacks rather than chasing. Again, chasing is the devil in the long run in this game. The devil. Satan. Any little thing will help you out drastically. You may not see the results immediately because, like I said, this market is evil. It'll let you get away with chasing from time to time. Otherwise, it wouldn't be that hard to avoid. It rewards you for chasing from time to time. But net long run, if you can avoid it, game becomes a little bit easier. That's why I told you these things, AJ, these things that you see on my screen, and anybody who knows me knows they probably, the first time they see it, like Lucci did, what is he doing? Right? What is Wall Street Jesus? What is that doing on the screen? Is that somebody else's monitor? But this simple, this is, I don't know if you guys are familiar with Hurst, HURST, you can Google it, but that's what this does. This is just a quick view of looking to buy weakness and of avoiding chasing strength. That's all this is, right? And it's pretty obvious for degenerate orangutans like me. Green, red, doesn't get much easier than that. So, the retail trader looks at this and looks at it as exact buy-sell signals. And if he can't put that into some sort of strategy, then it's useless. But for me, it's just very easy. If I see action in a name and it's up into red, it's something I'm better off waiting on and looking for a better entry. Doesn't mean that will end up working out, but it increases the chances of making money, especially over the long run, if I'm buying the green rather than buying the red. If that makes sense. That's all this is. That's how I use it anyway. And AJ saying, I also treat options and stocks like cans of soup. If you can buy a can of soup for $1 in the morning and sell the can of soup for $1.50 in the afternoon, the next day or two, yeah. It's funny that I worked with a trader who had a similar little saying. But that's not to make it too simple, but that's all you're looking to do. You're looking to buy something cheaper and sell it to somebody else for a profit, right? And look to buy it cheaper and sell it higher for a profit. That's the name of the game here. And looking to do that more than you sell it for a loss. If you can do that consistently, yeah, and AJ saying it's easier said than done. That's anything in life, guys. You know what I mean? Anything in life, if you think about it, it all sounds easy and it's all easier said than done. But it's the people and players that can find a way to do it, right? Find a way to get themselves to do it are the ones that end up successful in that field, no matter what it may be. So that's, as a trader, I mean, one piece of advice I would give you guys is that's what you look to work on every single day, you know? And if you're a new trader, the first thing I would say is get that philosophy out that you're going to figure out something where you never lose. I know for me, I don't know about you guys, for me, that was a big issue. I hate losing in anything. I'm just a sore loser, you know? And if you're a sore loser as a trader, you're a dead man. Losses aren't a bad thing in the market as a trader. Losses are good because you're used to it, but at the same time, you know, big picture, again, your bottom line is you win more than you lose. Just like a baseball player, you know, I'm a big baseball fan. You're not going to get a hit every time at the plate. You know, if you focus on that and look to do that, you end up in big time slumps. You get frustrated mentally, right? It's a mental game. Same thing for trading. You know, there are going to be times you get caught. As a swing trader, there's no way around it. You're going to come into January, you're going to be long a couple of things, and you're going to get caught. You know, what do I need to do so when I get caught, I survive and able to make money at a better spot? That's the way you got to look at it. Ranchero say mental toughness. I was up and down this week. I had to walk away one day, but always come back to slug it out. Yeah, part of the game, part of the gig, Ron, as you know. Know what I mean? It's part of the gig. You know, for me, for my style, and I think a lot of traders who try to not mimic me, but mimic the style I trade off of. The frustrating part is the days where there's nothing being done, you know? And what I hear from traders who I see trading my style is, you know, I'm racking up commissions, or you know what I mean? So they're not content. They think every day there's opportunity to make big money. You know what I mean? Every day, like I'm going to look to make $5,000 every day or every week. The market's not the same every day, every week. So for me, it was getting used to. There are a lot of days where I'm just having fun out there. I'm spinning my wheels. I made a little, I lost a little. I made a little, I lost a little. I made a little, I lost a little. And then, you know, like Friday, I'll give you an example. All week last week was useless for me. Useless. I know there were people out there who made a decent amount of money. For me, it was completely useless. And then Friday, I had a decent day. You know? So now I didn't pay attention to Monday, Tuesday, Wednesday, Thursday, where I scratched up or scratched down. Friday made my week. So that's the story. All right, guys, I'll let you run. Always a pleasure. Be patient out there. Look to buy blood and sell the rip. And that's that. I always appreciate you guys coming out. All right. If you have any questions, you know where to find me. Anybody who's new here, I should have done this at the start, but whatever. WallStreetJesus.com. All your questions you'll find answered there. Strategy section. Get a little more information about what we do. All right. And we got a free trial to the Steam Room if you're interested. No credit card. 3 days. You get a feel for what the hell we talk about and do all day long. Live audio, video. If you sign up for the first month after those 3 days, half off. This is the room here. For those of you who don't know, all the traders talking in here about how they're playing off the activity. And I'm on audio, video, giving play-by-play like Al Michaels on all the flow coming in. All right. And then you got private Twitter, which is included in the membership. So that's free, included in the premium membership. If you're interested in just private Twitter, so that's all the real-time alerts, sentiment, recap at the end of the day, no audio video, obviously. You go to wallstreetjesus.com, the products tab, and you click on private Twitter, and for $59.99 a month, you get access to just private Twitter. But again, included in the premium package. So it's not additional cost there. All right. Thanks a lot, guys. Enjoy the weekend. Good luck next week. And hopefully we can make some money. Be good, everybody.